Hello guys, in this video I'm about to share with you the one trade that will change your trading instantly. This one trading rule, trading strategy, trade entry will change the whole of your trading career. If you are struggling with being profitable, struggling with entry, struggling with analysis, just this trade rule, entry and strategy will change your career instantly. All you need to do is for you to follow every step that I'll be explaining for you in this video. Be patient enough for this particular strategy, pattern and formation to present itself before you make your trading decision. I'll run you through the settings of the indicator. First is the Bollinger Band. Period is 130, deviation 2.0, shift is 0. You apply it to close. Then we have our moving average. The period is 10, shift is 0. Method is exponential. You apply it to close. We have the second moving average. Period is 25, shift is 0. Method is exponential. You apply it to close. Then we have our relative strength index. You can see the levels. We have 10, 90, 50, 20 and 80 respectively. Alright, then on our relative strength index, this is the color. We are not using the indicator line itself. So all you need to do, you change here to the color of your background. So my background is white, and that is why my own color is white. So if yours is black, you need to change that color to black. Okay, the last but not the least is our commodity channel index. As you can see, this is exactly the setting. If you have done all of this, your chart will be looking like mine. Now, how do we make or trade this trade? All you need to do first is for you to understand the ideology behind the indicators. The first focus is not on the indicator. We are trading price action. The indicator is just an additional tool of confirmation. So please do not idolize the indicator. The goal of the trading is not the indicator. All you can see, the RSI and the commodity channel index is only for finding divergence. Right? So we'll only be looking for divergence using our indicator window. It is not a criteria for determining overbought and oversold. Having established that, we have our Bollinger Band. Now, what will this Bollinger Band do for us? Many of us, especially as a beginner trader, we are having challenge with identifying structural point in a real market scenario, not a textbook example. The structural point of a lower high, lower low, lower high, lower low. So we are having a challenge with identifying this structural point. So over time, I've done a research and I've come up with this Bollinger Band strategy, this setting that can easily help you to determine your trend. So it will do this for you in a very simple way. It simply means that when price is trending below the middle Bollinger Band, you are in a downtrend. And when price is trending above the upper Bollinger Band, you are in an uptrend. Now, I want you to understand the word trending. Not when price just crossed to above the upper Bollinger Band, you now conclude that you are in an uptrend. No. Price need to trend, which means that price has to be consistent at above the upper Bollinger Band, not just a cross to the upper Bollinger Band. Like in this scenario, you can see carefully that price has been trending You can see now, price has been consistent below the middle Bollinger Band. It has been consistently there. So this is a downtrend. Okay. Now let's look at step index. Look at step index. Price has been consistently been below this. So this is a downtrend. Right? Now this is our GBP USD. You can see that in this scenario, price did not just cross. Price did not just cross, but price was here. So even when it went up, you can see how it returns back. So price has been trending below it. So this is the first thing I want you to take note and to take advantage of. All right. Now, having established that fact, what is the next thing? The next criteria for us to do? This is a simple one trade pattern. Number one, this is GBP USD. First thing you want to see is for you to determine your trend. Now, price has been below the middle Bollinger Band. We are in a downtrend. And this is the strategy. Price will break the middle Bollinger Band. This first break is what we are looking for. And then when price break it, be patient too. The moving average will cross the middle Bollinger Band. Right? Then what do we want to see? We are going to wait for the first pullback. First pullback into the middle Bollinger Band. First pullback into the middle Bollinger Band. So immediately we get this first pullback. The pullback can break the middle Bollinger Band. You don't need to worry. But when the pullback is happening or is breaking the middle Bollinger Band, just like in this scenario, right? This is the first cross. Now the pullback is happening and is breaking the middle Bollinger Band. What do we want to see? Number one, look at this point. You can then mark your point of interest. Now, this is our order block. This last bearish candle before this down move is our order block. So even when price pull back, first pull back, even when price pull back into this zone, it falls into zone our point of interest. It throws weak but close inside. And then look at this. Price was making higher, but indicator window was making lower, low. And this becomes a divergence. So when we get that bearish engulfing candle here, you are selling. And then price gets here. Remember, though price is in an uptrend, but when price come close to your trend line here, you exit your trade. And that is why I said what was happening earlier will not invalidate the strategy that I'm about to share with you. Now let's look at another asset. This in particular, this is step index. So in this case, price break through it. Do we have a pullback? Here we have this particular pullback. But this pullback now did not get to the middle Bollinger Band. Do we still have to trade it? Yes. All we want is to see a pullback as well. So this pullback becomes our bearish flag pattern, right? So the pullback is our bearish flag pattern, and that is it. Here we are having a divergence. This is a divergence, and price break out of this becomes your entry. So this is applicable on every time frame. Every time frame. Now look at this. This is boom 900. What happened? First, we want to see a pullback. This is a cross. After this cross, we have no pullback. Price come below it, right? So you can be strict and wait for your pullback to always come back to the middle Bollinger Band. You can be that strict, right? To make it easier for you. Then look at what happened. They first pull back to the middle Bollinger Band. You can see this build up a chart pattern, and then you see that first pullback to the middle Bollinger Band. And after that, you can see that rejection of the candle formation, you sell. You see how this plays out beautifully well. Okay, this is a second pullback, but the goal is not about the second pullback, but the first pullback. Now, this is volatility 75. This is the cross, right? Now we are waiting for the first pullback to the middle Bollinger Band. Now, this is not an indicator based strategy, but it's a continuation pattern, right? So look at what happened. First pullback, right? This, we're having an equal high there. Look at this, a divergence that confirmed towards the end of that pullback. We have this pin bar in that zone, and then this sell to the downside. So this is how you will be making this entry. This is boom. This is boom 600. You can see that price crosses down, price pullback, first pullback, first pullback, first pullback, first pullback. Even if you will lose, right, it will only be once. Look at this one pullback, okay, but eventually it breaks through later. But even at that, it returned back again and then pull back there, and this time around you get it right. So this strategy is very much effective. I am telling you with confidence that this has everything it takes to change your trading around. But remember, it takes patience for you to wait for price to pull back. And when price pull back, you are looking for a candlestick formation. Yes, which is a price action. And then on your indicator window, you are looking for a divergence. If you look at this, this is a divergence. So you are looking for a divergence. So this is not just you idolizing, no. Okay, and the series of how the thing is going, you realize that you will go ahead to mark your point of interest. Each of these pullback will coincide with the point of interest. Look at this. So the point of interest is never out of the equation. Price take away this low, pull back into this other block. So your point of interest is not out of the equation. So your price action is very, very important. Here we have a fair value gap. So you can see what happened. This pullback is not just a normal pullback. It went to fill in that fair value gap and then continue to the downside. So all of this put together becomes your advantage in this market. So I want you to backtest this, and I want to hear your feedback. Please let me hear from you. Thank you for watching. Thank you to all our new subscribers. Do not forget to like this video, share, subscribe, turn your notification bell so you'll be the first to get notified when we upload our next video.